And let's first talk about global markets. Global markets have been in a tizzy over the last few days, but the Dow recovering a little bit in the last couple of hours, with the pound sterling also showing some stability. Global markets have been trying to bring some calm into a crazy situation. The Bank of England today jumped in and went into damage control mode, announcing that it will kick off a buying spree for long-dated UK sovereign bonds in order to contain spiraling yields and stave off a looming financial crisis. In fact, they've suspended their gilt sale process, which was supposed to start next week. So that is off. They're not going to sell right now. They're in fact going to buy. Markets were quick to react to Bank of England's action. The 10-year yield, which had soared past 4.5%, dropped to near 4.2%. The emergency intervention comes on the back of IMF's warning to the UK government, asking them to re-evaluate the package of unfunded tax cuts it announced last Friday. One of the first major decisions the Liz Truss government made, and it seems to have backfired. Now, amidst all of this, we also have a mystery gas pipeline leak in the Baltic Sea, two leaks actually, that has got the European Union as well as NATO crying foul. NATO General Secretary today met the Defence Minister of Denmark to discuss what he called the quote-unquote sabotage of the Nord Stream pipeline. Let me break this down simply for you. The Nord Stream pipeline is a Russian company which supplies Russian gas to Europe, and this has been, one part of it has been indefinitely shut for the last few weeks because of repairs, and now there have been two leaks in another major pipeline in the Baltic Sea. Meanwhile, EU Chief Ursula von der Leyen has warned that any deliberate disruption to the Nord Stream supply is unacceptable. Meanwhile, Russia has called these allegations outrightly quote-unquote stupid. So what happens next? Let's take a look at how markets have been responding to all of this. Some kind of stability, as I said, after opening trade in global markets. The Dow has also stabilized, so have European markets. The FTSE MIB right now still low, but Stock 600, DAX, FTSE and CAC all up in the green marginally. Quickly take a look at how US markets have also been doing, and recovery over there. The Dow Jones about 264 points up. So recovery mode is being seen, but can it last is the question. Anurag Singh, managing partner, Ansid Capital, with us on the show. Geoff Dennis, independent EM commentator, also with us on the show. Welcome to both of you, and great to have you on. Geoff, let me begin with you trying to make sense of what's going on across Europe and in the UK. Let's start with UK first. The Bank of England scrambling to damage control. A tough situation. Do you think it's enough to calm nerves?
It may calm the situation in the short term, certainly, but the origin of this is this catastrophic fiscal action that the government took late last week in the biggest tax-cutting package since 1972, combined, of course, with the earlier decision to cap energy prices for the next year. So massive widening of the budget deficit, complete fiscal irresponsibility, which, of course, the IMF has pointed out, everybody else who looks at it has pointed out. And because of the surge in bond yields, which responded from that, was the response to that, the Bank of England really had probably no choice in the short term to switch from quantitative tightening to short-term quantitative easing. And yet what you've got now is fiscal easing of a massive amount, a bit of monetary easing, whereas really one of the only ways you can solve this is by raising interest rates. So this is only a short-term situation, but it is all generated by an extraordinarily silly, stupid, irresponsible fiscal action by the UK government last week.
So you're saying very clearly it was stupid action by the UK government. Will they come back from it, or will they walk back from it is the question. Anurag Singh, is that the only way? A walk back perhaps from the government, or a postponement of some of those schemes, or perhaps just a better plan on how they're going to fund these tax cuts? This is something the IMF has also asked for.
Yeah. So, Tamanna, that's a tough one, because if you see Liz Truss, always from the start, she promised exactly what she's doing now. She said we have a high tax regime. US can't promote industrialization and capitalist economy until the taxes are lowered, right? Question was whether this is the right time to do it, and whether after overspending in COVID by all the developed markets, was that the right policy to do? But be it as it may, we are where we are. I think the tax cuts are here, and if they can't be announced, they can't be financed by raising taxes or government revenues. They have to be financed by debt, and I think that's the problem. The markets are calling it as the blink of Bank of England, right? Ultimately, Tamanna, the custodian of monetary policy and public trust is the central banks. Politics always plays a part in what the government does. So government is expected to be populist. But I think what holds the currency markets, monetary policy is the independence of the central banks, which in this case, Bank of England was expected to pitch in and kind of hold the fort, at least on that front. But I think today, as it is seen that they have blinked, it's a classic case of.
Why are you saying that, Anurag? Can you explain that further? Why are you saying that? Because Bank of England has come in to calm the markets, right? They've come in to sort of clean up the mess.
Yeah, correct. But the mess which was created by bad policy making, that's the point. So when I say they have blinked, the point is inflation is rising, energy prices are rising. It has to be paid. The bills have become due. And when the bills become due, it is to be paid by the taxes, which is ultimately by the people. So people will have to take that price. If the government caps the pricing, that money has to be financed, and that will be financed by debt. When the money is financed by debt, obviously, government pays the price of borrowing from the future generations. Bank is, why we are calling it as blinked is because I think in this case, central bank, Bank of England could have stuck its guns, said that we are going to continue making pound borrowing expensive by raising rates and then not buying the bonds. Where they've blinked is that they've gone ahead and bought the bonds, because here's the concern. If they don't do that, then there is a risk, and the Bank of England has called that out, that some institutions might fail. If your financial institutions start failing, we know what happened in 2008. That's an even more dangerous scenario. So they have supposedly come to the rescue to save, but in the short run. But eventually the price is to be paid.
Well, that's, it's going to be unlikely that they will be able to kick the can down the road beyond a point. Geoff, since I have you here, I want to get your comment also on what's happening across Europe and this whole Nord Stream situation. We're going to play some of that footage as well. An astonishing footage of the gas bubbling up in the Baltic Sea. It's been now called a no shipping zone in that specific area. Do you think that this could escalate?
Oh, I'm sure it will escalate, and I'm certainly not scientific enough to explain what's going on in terms of the potential leak there. But all I think we all know is that President Putin and Russia is gradually turning the screw, so to speak, in terms of energy supplies, which of course is leading to tremendous pain in the European economies. And of course, sharply higher inflation. I mean, some of these inflation numbers in Europe are almost unheard of, especially in a country like Germany, where we had a PPI number the other day for August, which was up 49% or something, quite extraordinary. So I think it's only going to continue. And it's very, very negative for the economies in Europe, where I'm sure we're going to have a recession, and possibly a fairly deep recession. And of course, all of this is combining to pushing the dollar up, which is having its own feedback loop on everything, because it's contributing to the crisis in the UK itself. And I think all I'm really saying here with my initial comments is that we've layered on top of this situation in Europe, which has been ongoing now for several weeks, indeed several months, with the tighter energy supplies, etc., pushing up prices. We now layered on top of this this fiscal action by the UK government, which may well, as my colleague there has said, may well have been what Liz Truss promised, but it was done in a very, very strange and irresponsible way, in my opinion, because there was no funding of these tax cuts. So the UK's in trouble, Europe's in trouble, the dollar's strong. I wonder at some point whether we're going to hear a slightly more benign set of comments from Jay Powell on this, because the dollar as being this strong is not helping anybody, frankly. And after all, the the US inflation numbers are not going up anymore. It's just a question of how fast they're coming down. And so I think all these problems in Europe driving down the currencies against the dollar is just simply compounding this sense of instability in global markets.
You know, it comes down to Jerome Powell. That's an interesting takeaway Geoff Dennis is talking about. You agree, Anurag? And your commentary on what we're seeing in Europe right now. Report just yesterday that Germany could hit recession. A little bit of trepidation, I would say, on political developments and the new government in Italy. And then, of course, you're seeing this Nord Stream business. Will it get worse before it gets better?
Yeah. So Tamanna, quick comments on what Chair Powell is doing here. So I think he is providing the view that somebody has to hold the ground. Powell is trying to hold the inflation and monetary policy where it should be. I understand it is not popular, but then if even monetary policy is popular, then what's the difference between a government which is populist and a central bank, right, which has to kind of hold to the principle. So I think Powell is doing the right thing, except that there is a 40-year history. Tamanna, we have to see this in light that there is a, when we say 40 years, it's easy to kind of say it in numbers, but there is one generation of people in US which have not seen inflation more than 2% ever, which means that most of the people who are between 60, 65, even advising and sitting on federal bank and are making policy, in their working lifetime, they've not experienced recession. So if an animal is unseen for 40 in their working careers, they don't know how to kill it or how to tame it, right? That's one part of the equation. So nobody knows, and we see that in federal projections. You know, every month they come back and revise the inflation numbers by like 1 or 2% for the 2022 year end. So that's take on that. It's going to take some time, but I think he's going to stick to his guns. He got his confirmation very early this year, and I think that made sure that he has 4 years to go. So he's going to stick at it. On EU, I think it's interesting to see the weaponization of dollar earlier when there were sanctions put on Russia, and now the same Western forces are saying it's weaponization of oil. Well, there is weaponization all around when there is war. So I think there are kind of pros and cons of everything. Bottom line, Tamanna, the point is, if the recession is due, it should be taken. Look, monetary policy can intervene and soften the blow, which I think was done in 2008, which also was kind of overdone in COVID times. I think these economies were not so bad, but I think we just overspent. But I think if there's a period of overspending and debt binge, as happens with the case of families and everyone, if you take too much debt, there has to be some time where you have to repay the debt and have that kind of fiscal prudence. And I think countries are no different. So I think if the recession is due, it should be taken. Economies will come out healthier than that, rather than just trying to manage it by throwing more money at it.
You have to go
That's
on
not
that diet. It's after a binge. Sometimes you just have to go on a bit of a diet. And countries will have to do that as well. But, you know, Anurag, I just want your take on what's happening in India. And how impacted do you think we will be with all of these global events? We've seen markets hit 6 days in a row. For the 6th trading session in a row. Do you think that pain will continue? Because there seems to be a point of view that we're fairly insulated. We're marching to our own beat. Our domestic conditions, are much healthier, etc., etc. What is your take on this?
So in the sense that, so there are two different aspects. One is the economy and the market. Markets are holding the price and will continue to hold price, because if there is extreme gush of liquidity which is coming in through EPFOs, SIPs, the numbers are there in the market, about 40 to 45 billion being pumped in the market every year. Most of it, most of the money is passive money. That will hold the levels. The challenge is on the growth front, and I doubt if we can come out with a 6% growth this year. That will be a sound achievement in a scenario where the rest of the world is just struggling for 1 or 2%. So I think we will be impacted to the extent that, our growth will lower to maybe 6%, 5%, right? Oil will become expensive, so there is a price to pay there. But then this is the time to look inwards and make the domestic economy even stronger. If there is 1.3 billion strong consumers and we can give them power to consume, and I think then we can have our China moment. We haven't had it for a while. It's long overdue, and now is the time.
For that, Geoff and Anurag, great to have you on the show. Let me move on.